Hey guys, in this video I wanted to go over a code that I created. The code is called the risk management single position. The idea is that I believe I've always been somewhat good at picking out stocks depending on their qualitative and quantitative framework that I have. My problem is that it may be that your idea is good, but you may be in the wrong time, or my risk management is not really that good. So in order to prevent that in my real trading, I wanted to create this code. What this code basically does, that after you have, for example, taken an initial 10,000 position, what it will do is that it will, let me just scroll down here. What it will do is that it will actually sell if the stock declines 5% of, then we will sell half our shares, and half of the 1,000 position at 5%, then we will lose $250. But what this code also does is that if it goes, it will readjust the stop loss, that you will have more room for it to go lower, for you to actually lose 10% of your initial position, which was 10,000. So we have absolute max loss of 1,000. The idea is that if it goes further down, it's fine, but then you have more room, and then you actually just need to take the loss, and then your idea might have not panned out as you thought it will be. But there's also different kinds of scenarios that after you have bought 10,000, the stock can just start going up, and that's fine. Then this code won't do anything more than just be running in the background, doing nothing. But there's also the third scenario where you actually, the stock falls 5%, you sell half, but then it rebounds to the initial average cost that you have. Then this code will actually repurchase the shares that you actually sold at that average price, because that is more like the confirmation of that trade, that it might, even though it had dipped down a bit, now it may be a reversal back to the upside. Again, you should also have a predisposition, fundamental predisposition of the long position that you have on the stock, so that's more important. So there's no thing like technical, we are just using technicals and price charts in order to actually have a better entry and be more confident in our trade. But the fundamental analysis is the most important part. I talked about this in another video, but we have connected to our broker, which is my paper trading account in Interactive Brokers, which is right here. What we are doing is to actually connect to the API, where it actually has like a, in order to actually create a connection, we need to create a connection, and then we also need to talk to the API. So the way we do that is by actually sending in a client e-client request, and then we get back an e-wrapper response, and that e-wrapper response is what we actually need in terms of when we get the response, we want to store that response into variables and then use it for trades. So basically we have creating a e-wrapper e-client for market connection. We need to connect it, and then we have created a contract detail class or functions within the class, and we also then created the order details. Whenever you want to make a new order, adjust your own order, you actually have to call something called next valid idea. When you actually get the next valid idea, you are able to actually then make another trade. You can see right here that when we are within the e-client function placing an order, we are within this function already asking for the next order idea and then increasing it, and then we can place the next order. So that's been doing within the blueprint of our class, which is intuitive and makes more sense to have it there, so you don't really want to have it outside. The next thing we have is the position detail, and then we want to know what the average cost is. That's what the important part is for me. And the reason why is that when we are putting our $10,000 position, we want to find at which cost, and then that will be the average cost. If you are using 5,000 and then after 2 months you another 5,000, it will just be another cost, so that's fine. But we will be using that. And then we have the market streaming detail, not screening. This just establishes a connection that we are already within a separate thread streaming market data. So while we are going through our code and going through the if statement that we're going to go through, it will in the separate thread already just every second just gather the streaming data. It's gathering the streaming data, but we are never calling it for us to actually have it. So that makes sense. So we won't see it unless we call upon it, and I will show you how. And then we need to create like the helper functions or helper methods outside. The reason why I wanted to have it outside is because you want to use it in other application in terms of options, for example, and stuff like that. So you really don't want it to be within this class of framework, because then you would need to build out the whole of the blueprint. So I just for that reason I just wanted to have it outside. So here is actually the initial code. What we're doing, we're gonna be using NVIDIA. So the idea is that I have already tested it out, but I will show you why I can't show you real time. I'm gonna make another video with multiple tickers where I'm gonna be using more of testing unit applications, and you guys can actually see in the video how it actually performs given the scenarios. So you just have to believe me that the code works. So we have taken a position in NVIDIA we started with 10,000 market value at the average price of 92.45. Remember that. So the first thing is that after you have made the initial in your application, you can then start running this application in the background within either in your cloud or the local computer. We are creating a connection to the API. So now we have established connections, and then we are starting to stream. And then if you see, start stream is the function that we are calling within a separate thread. The same goes for connecting to IB. You can see it right when we are connecting to IB, that it connects with our paper trading account with that local within our local computer, and then within a separate thread with daemon equal to true. So that's the streaming, and here we are going to get initial data. What this does is that we are going to define the ticker, which is NVIDIA. We're going to create an empty dictionary, and then we're going to create a positions JSON file, which you're going to be using later. And we are going to use the request position for API. I just added app right here. I prefer to use the IB, but I wanted to create it from a general perspective of app here, and then we're going to be using IP downstairs the same way that we are initiating as IB up here. So it should be, if you hadn't created a function, it should be IB.request position, requisition. And then we are getting the when we are getting the client asking eClient function for creating the position, we're gonna take the average cost, just as I said, and then we're gonna take the position, which is the quantity, and then we're gonna just set out take profit for 1.3. That's not really the important part. The most important part is to actually have the risk management when the trade goes against you. So what we are going to do, we are going to create our first sell price, which I just said, which will be 5% lower from where we actually bought, and then we're gonna be wanted to sell, and that's the value, and we're just gonna calculate the realized loss and find out how many remaining shares, remaining costs, and then additional costs, given that our max loss per position of the 10,000 is 1,000. After it has gone down 5%, accounting for slippage, you will be approximating around $250 loss, because you're only selling half your position at 5%. So selling 5,000 and the 5% of that loss of that is then 250 plus minus the slippage. And then we want to calculate the next stop loss, which is basically the remaining cost. So we are already at 250, meaning that we can only lose then 750, and then we want to find out how much lower we can target our new stop loss in order to actually max lose 1000. And then if you have sold or 5% of the sold half of position at 5%, and then it goes back right up and had a reversal, then we want to repurchase those shares, but we don't want to do it manually. We want the computer to do it. And then we are just getting all the information into a dictionary right here, and then creating a JSON file. And then so this is what it creates. It creates this JSON file that will be needed, and yeah, it's taking all the decimals, but we are just gonna keep it around to 2 decimals, and it is the string depending on the shares, and that should actually be integers, or integer values. So the reason why I want this is because if we are going into day 2, for example, we want to not create new data. We want to just, if we already have that file within that folder, we just want to open it and not recreate it. That's the whole idea. And then it's more manageable also, so that's also good. So we'll just be using this. I can just keep it right here for now. And this is the function that we are calling in order to create the file right here, and then it goes to my local directory within the map. And then we are loading the data. If there are, so we are just loading the data and then using try and accept. It's just good way to actually practice this. And then I want to load the data within the series, pandas data series, and then I want to actually make all of the, I can't because it's going in a different thread. But the position will give you, if you look at this, you get a string, for example, and I don't want it to be string. I initially want it to be float, but we also have a string of characters here. So I just said that accept the first position, take all the positions, and then make them float. And then here is actually our position sizing algorithm for one specific stock. We are just printing out the current time. We can see right here for every minute it will be run for 6.5 hours, which is from 9:30 to 4. This is my local time, so the stock market here actually opens up at 3:30 p.m. Yeah, so just for me to actually have track on it. What we are saying is that you remember that we streamed the data that is being streamed. We are now calling upon that. When we are calling, we want to know what the price is, so it's checking every minute. That's the point. And if it's lower than the first sell price or the first stop loss sell price that we had, and that our ticker position, which is the shares, is lower than the remaining shares, meaning that we haven't sold it before, then we should actually place the order, and then we want to sell or share sold, which we have within here. If we look at share sold, which is half of 108, that's the idea, at the first sell price per share, which I just running to 2. You can see right here it's at 87.82 or 83 if you round up, and then we have an exemption here, and then we says the next elif statement. If the last price is below the new stop price and the position is equal to the remaining shares, what this is saying is that now if we have sold after our 5% decrease or half position, then your position has decreased, and then we are calling on the streaming data to check on the position. If it is the remaining shares as 54, then this should also be 54. If those things are equal, then and it is below that new stop loss, which was calculated to actually have our max loss of 1, then we actually want to sell the remaining position. And this will only be triggered if you have only the remaining shares, or after you have actually just sold half of it. And then we will be out of the trade, so there won't be any more positions left if this happens. And then another scenario is that the last price is above the average cost, that it has gone up to the average cost, and this is very important, our position is equal to remaining shares. What this is saying is that if we have decreased 5%, sold half our shares, and then it has rebounded up and wanted to go up, we want to, then this would be equal to this, and then we can actually buy back repurchase of shares. You can see repurchase 0.54, and this time this was 108, so yeah, so 54, that makes sense. And then if the positions is equal to 0, that if this has happened, then this will take order, and then LF will be checked, and if this is equal to zeros, then the app will be, then we will disconnect our connection to the IB. And we want to run it for the whole market day. If it's a local computer, you can have a task manager to do that, or you can have like a AWS cloud computer to actually create it up. It's more of work to actually set it up. It's quite useful to actually have it. And then when you have run it, this will actually run for 6.5 hours. Every minute it will check for that specific one position. In our case, it is NVIDIA. The idea is that I want to create this in the sense that I have multiple positions that I have created. Let's just give an arbitrary number of a 50,000 account, and then you have 5 positions of 10,000 each. And then after you have done your quantitative and qualitative analysis of a stock, you are then looking at the price action and then waiting for the good opportunity. Sometimes you're not really sure, but you have an idea, and then the idea should play out depending on the top-down or bottom-up analysis. And when that when you are, and then you can actually put on the trade of 10,000, and after that you can actually have create the algorithm that actually monitors for you, that you don't need to. Now this is just a simple way to do it. It's looking at shares. You can always do and use options in order to hedge out any risk if you want, or that you have changed your position, so you create another position upon the initial position, for example, and so forth. But this is just a simple way I want to make for myself. This code I cannot really show you in the TW application because NVIDIA actually going back up, and that was my test, but I checked it when it went down, so that is fine. But what I'm gonna do is that when I'm gonna be creating the next code for multiple stock that I want to use in my real trading, I will also be creating testing units, because I want to test it out on multiple tickers, and then actually have like a scenarios of testing of actually see that there's no error occurring, or if there's error, that how can we manage those errors, because if it crashes, then it's no use. So yeah, I just wanted to go through this, guys, with you. I hope you guys find this interesting. If you want me to go through this code or have a question relating to a specific part of the code, you can just add your comments in the comment section and I will get back to you. Yeah, then I'll see you guys in the next video. Bye.